already know, just hit me. Ain't nothing for me to send it to you. All right, I'm gonna mute it. All right, so let's go. So this is a trading plan. I actually got this. I think I got this copy from Abel Melendez himself. I didn't get it directly from him. He had it like on one of his old YouTube videos, and he had like he had the link of it in the description. So I just copied the link and I just took it. And I think somebody in our group, I think it was like on Telegram or something like that, somebody actually dropped the link again. So it's the same thing. I pretty much just like changed it around and just made it to my own. So, welcome to your Trade Made Simple template. Usually, if anybody wants it, I'll definitely like send out the link. If we don't have it in Discord, then I'll send it out for anybody who needs this little template. And then like your second thing, this is like a little constitution. Like if you really like really taking trading serious, then usually you'll just have like a list of like rules that you will go by. Bet I got you. I'm email it to you later on. You usually have like a constitution, like a list of rules that you go by. Like how you got affirmations. This is pretty much the same thing. These are your like trading affirmations. So, I am a successful, disciplined forex trader. Yeah, I got you too. I'm gonna send it to you too. Successful, disciplined forex trader. I will always continue to educate myself on how the markets work. Like pretty much these are like things that I pretty much like tell myself on a regular basis. And I haven't updated in a minute, but there's no need to right now. Like I always have to like keep looking at this. So that's why it's always like the first thing on the page. And then when you go to the third thing, this is like a trading plan. This wouldn't necessarily be like a trading plan. I pretty much just put that for the tab. This is more of like confirmations, things that you need to know or understand before you get in. Gotcha. So the first thing first, this is the rule that I was hearing when I first came in, is when you don't risk more than 1% of your account, which is cool. Like 1% of your account, I'm gonna go to it on risk management goals. I'm gonna go to that in a minute. But the way most people trade, like for the ones that do like a nice risk with a nice reward, is about 5%. Like Tuesdays, Wednesdays, Thursdays, when we really like going crazy in the markets, that's when you should do about like 5%. 1% is like on Sundays, Mondays, and Fridays when we got those trap days, when the market move like pretty quick and you just want to like 20 pip and dip and like get out real quick. And like that, that's just my standpoint on it. Because you're risking a little to like, get like a little bit more back. So the trading style, like what are you looking for? Are you scalping, intraday, swing trade? You have to know exactly what you're looking for. That's what I've been kind of like thinking about all week. Because like if you swing trade, like the thing is you have to know like how is your patience. If you're not really a patient person, like if you want to see your money like real quick, then you might be better off with scalping like fast, especially like if you like US 30, SPX, gold, you like the fast moving, like get you paid real quick, like definitely like I wouldn't say like scalping necessarily, but like scalping like intraday, because the same way you can make a bag like on SPX US 30, like if you increase like the lot size and you got like a small like stop loss, then it's pretty much the same thing. Because I did it the other day with Euro USD. I kind of over leverage, like everybody over leverage every now and then. Like you're gonna get the bread one way or another. So like Tuesday when we had that sale, it was actually by accident because I was playing on my demo account, but I switched over to my real account and I sold it, but I still had the very same high lot size. But it still moved in my favor, so I was good. But the way it was moving, busting, high lot size. So it's all the same thing. That's why me personally, like, I don't really like trade. Like, I mean, it's cool. Like, I'll mark up SPX to US 30, appreciate it. But like, I don't really just trade it myself. Like me, I'm better off just like, like doing like highlights on like pairs that I always know. I always trade like pairs that I know, that I'm comfortable with, that I see the trend, I see the obvious move. So that's the second thing. When would this trade be planned, started? And whenever you look at the chart. Whenever you look at the chart and you peek and you see that you really want to get into the trade, then you just have to peep and see like what you actually like. What if you like support and resistance? If you like that big up move, I know some people use indicators RSI. If you see it getting close to indicators telling you want to sell, what are you looking at on the sell? Like the minute that I see something on my truck that I like, I'm anticipating it right then and there. Or I'm marking it off just a little bit. I might not finish the markup, but I'm gonna just mark it off just for a little bit. And then as it gets closer into the area, that's when it takes off. That's why the setups have been coming out like they've been flying like crazy, because I already have like setups I already created. Like some of these setups that I had this week or ones that I had last week, they were already pre-planned. Like they were already marked off. It's just that when they got to the area, I went in even smaller and just seemed like a perfect, like, your 5-minute, 15-minute entry. And then you get on your entry and you take the ride up. So you have to know like exactly like what you're looking for if you want to get those quick pips or if you want to get that big swing. It just depends like on what's good for you. The same way you make money, like you don't have to swing like so big just to get pips. Like you can get a scalping entry and then you swing it, and that's gonna come out like you're gonna come out on top of the big at the end of the day. Like you got like a 10 pip stop loss, 10 pip risk, and then you take it like all the way for like a daily swing for like 200, 300 pips. Like if you risk $10 for that stop loss, and then it comes out to like 30 times as much more. Like, so that's pretty much like how like risk to reward actually like can save the day at the end of the day. I'm gonna get to that in a minute. So your ideal setup, like what are you looking for? That's pretty much what I just went over. But for me personally, my ideal setup is a little more advanced. So I'm going from the time frame, the trend. That's always number one. You have to know if you're going up, down, or if you're consolidating. Support and resistance, your actual zones, highs, lows, imbalance, the gaps. That's more of my advanced stuff. The imbalances, liquidity, breaker block, and the risk to reward and the correlations too. Because if one, already know, like if EU is going up and GU is going down, then EG might be going up. So that's the extra like trade idea just right there. Like if you looking at Euro USD and you bullish and you peep GU and it's kind of falling, and you look at EG and it looks like it want to buy up, then that's two trades. Like now that you don't have to get in both trades. You don't have to just like trade just because. But with the idea of you getting in those trades or having the idea already set, that's like more trades for you. So same thing, Euro USD bullish, AU bearish, EA going up. And, that means if you see like a sell opportunity on AU, you see buy opportunities on EU, they all go hand in hand. Confirmations, this is more of like a simpler thing that you can use. Like this would be like more of like your basics, like your candlestick patterns, your reversal patterns, your dojis, tweezers tops, double tops, double bottoms, head and shoulders, your indicators and your MAs, seeing divergence. I can go over divergence before the call over with, because I'm gonna run the call for an hour. If anybody like want to stay on longer, like I'll run for as long as I need to. But as far as right now, I'm running for like 10:30. But anyway, I'm gonna go over divergence before the call up with to show, just in case anybody want to know what divergence is. The time, yes sir. What's good, my boy? The time is critical. I'm actually glad Ryan told me about the kill zones, because like time matters on when you get in the market. Like getting in on the EA sale. Like if you press that sell button at 12:50. No, let me do a better example. If you press that sell button at like 127 versus pressing this at like 2 o'clock, like that's a whole different thing. Like it happens a lot, because like the sessions actually start when the banks like enter the market. So that's what I was saying last night for London. Yeah, I can drop the link, so it's no problem. And then I seen like a couple of people drop the emails too, so I'll send it to y'all email, this whole trading plan. So yeah, but timing is like really, really critical. So I always have to make sure like I'm getting in at a good time, on people in the markets at a good time. Quarters theory, I can go over quarters theory too. Quarters theory is let's say you got whole numbers. Let's say you got say a Euro USD. Where is it at right now? Matter of fact, USD JPY, that's a better one. So you know how earlier we had, I think the price of your USD JPY, when EP sent out the trade earlier, it was at 104.400. So like quarters there, it's just like whole numbers, quarter numbers. So 104.0, and then you got 104.25, and then you got, I think that's it. No, 250. It's 250 pip moves. So every 250 pips, that's when it goes up. I'll show an example at the end of the call, anyways. Fibs, they really play a part. I guess I'll put time again, and then your actual patterns, like your flag patterns, your channels, the triangle patterns, all this and that. So boom. So the trade journal, yeah. Again, like if you like really big, like on the actual like trading style, like that whole actual trading thing, this is like a journal that you can keep a track of. I ain't gonna lie to you, like I ain't finished. The last time I really touched it was like in June, but I have a Telegram. Like my Telegram is like full of everything, like every little note. Like if I hear something on Coffee and Pips, or if I hear something like on somebody call, like I drop it in the Telegram real quick. When I cook up a chart, I drop it in Telegram. I got my own channel on Telegram to like send my stuff information before I actually like send it out to anybody else or anything. But this trade journal, it pretty much like, you know, you keep track of what's going on. So you got your pair, you got your actual type, your lot size, your risk to reward, and then you have your little confirmations. I think as I go over to the right, I got more notes too. Yeah. So yeah, just keeping, just the fact of like keeping it organized and just seeing like your progress over time. I understand my progress over time. I have like my charts are here. I got like a couple like charts of like different folders and all that stuff. But it's pretty much to like keep record of you and how your progress is going. So now this is the most important part of the call. Like this is what I want to talk about the most. This is the money management. All right, bit. So let's go off of examples. And then after I'm done with this, I want y'all to like drop like numbers, like drop account balances, and then I'll throw them in and like I'll play with them. Like I'll show like different numbers. So let's assume you got $100 account, and your risk to reward will be about 5% for 15%. On the chart, that's like a 3-to-1. So on the chart, that would be like if somebody sent out a trade and they say like 20 pip stop loss, like the 3-to-1 for that is 60 pips, because 20 times 3 is 60. So it's 3 times as much. Like your profit should be back 3 times as much as you risk. So that's what this is. Like you risk 5%, you get back 15%. Earlier when I first started the call, that's why I was saying like a lot of people, they say risk 1%. Now let's say if this was 1%, so we would do 1% risk, and 3 times of 1 is 3. So our return would be 3%. So with $100 account, like the max you can risk technically would be like $1. Or if you had like a $200 account, then that would be like $2. And then your profit would be 3 times as much of how much you're risking. So that's why I usually do like, 3-to-1 for a general idea, because a lot of people like they go for 3-to-1s. But at the same time, like with the 1%, I would say like on Sundays, Mondays, and Fridays, if you're not really too sure, then like if you just want to be comfortable, especially if you got like a lot in the account, if you just want to be comfortable, then just do like like very low risk. That's usually what I do. Like if I take one trade on like a Sunday or Monday, that's probably like the only trade that I probably done took. Or I'm gonna take it and just ride it for 20 pips and then dip out the market. So let me see. So I'm gonna say like 500. Let's say somebody got 500 in their account and it's a regular like Tuesday, Wednesday, Thursday, because that's when the market moves like it's heaviest. That's when we got news. That's when we got a lot of news going on in the market. So me personally, 5% risk, 15%. Okay. So for somebody that had 500 in the account, if they following this like actual like trading plan, they would risk like $25 on that trade, or have like $25 going on that account, risk max, and their goal, their 3-to-1 goal would be $75. 25 times 3 is 75. So let me go back real quick and show, like, because I'm gonna show how risk reward works in the favor. And everybody, like, I noticed, like, everybody trades different, but if you understand risk reward, then it's a lot different. So let me use this one for example. 161. Yeah, that's a crazy risk to reward. I think I meant to put 16.1 and 39.1. So that's what I'm gonna use. So I'm gonna say 16.1 and 39.1. I think that's like 2-to-1. That's like 2.3 to 1 or something like that. So I'm gonna just say 2-to-1. So if this trade hits TP for like 39 pips, then we should get back at least like 2 times as much of the 16. So 2 times as much. Let me go here. So let's say we had a $500 account, and we want to max out the risk of that 5%, and we got a 2-to-1, right? So 5 times 2 is about 10%. Or if you want to be technical, because I did say like 2.4, so I say probably like maybe like 1.12%, 1.2, something like that. So ideally, you would have been like risking $25 for $60. And just by having this, like, I'm just going by examples, because just by having this plan, like, you'll understand how much you should like risk and how much you should get back. And this is just like with the TPs, like if y'all notice, like in our trades, like we be shooting for like 6-to-1s, 5-to-1s. Like every now and then we got our like 1-to-1, 2-to-1. But then we got our jackpot trades that really be like taking off 4-to-1 swing trade, risking 20 pips for 200 pips, risking 20 pips for 100 pips. Like those are like good like risk to rewards. And I realize it because like even if I got like a 10 pip stop loss, but you going for 50 pips, like that's a nice risk to reward. Like that's five times the risk to reward. So if you're risking $25 and you get back 5 times as much, 5 times 5, that's 25. So you be risking $25 to get back 125. I mean, it's just crazy. When I really think, because I always like thought about it, I always had this plan. This is about like having. This actually goes back to having using the tools that you have access to. I've been had access to this, but was I always following the plan? Like, nah, like I wasn't. I was not following the plan. But it just makes sense. Like it's a simple like plan. Every now and then you're gonna take your losses, but you see like your wins outweigh your losses, regardless. So let me give a secondary example. Now I'm gonna go over like 20 pip and dip. A strategy for that. 50. Now I'm gonna say $100. Say you got $100 account. And ideally, because like a lot of trades, when you see them, like the most common 20 pip and dip trade you'll see is like you risking 20 pips for 20 pips, or you risking 10 pips for 20 pips. 85, yeah, I use $85. So let's say you got an $85 account and you only want to do 20 pip and dip, like you just trying to like get in, get out real quick. The 20, we do have a blueprint in our chat. I think it's like in it's in one of our tabs. I think it's like in our profit. It's something in our tab. I think it's like profit margin or something like that. And basically, like your risk will equal your reward. And I did the calculations. It's about 17%. So if you got an $85 account Like ideally, you'll be risking 14.45 for 14.45. So like that's how much your goal would be if you're aiming for that 20 pips. And if you just like want to get in and get out real quick. Now at the same time, like let's tie in risk to reward, what I was mentioning earlier. If you're risking 20 pips, but let's say the trade go more, like way more for 20 pips, like you risk 20 pips, but ended up going for like 80. So 20 times 4 is 80. So 17 times 4 is, I don't know. Let me see. 17 times 4, 68. That sounds about right. 68%. So 68%. So this is saying that like you risk 14.45 and your payout for that whole trade, if you close it out at those 80 pips, if you close it out at 4 times risk to reward, your payout is going to be $57.8. Like you risk like $15, like you risk like some lunch to get back like almost like $60. Like that's a very good risk to reward. So let's add that 85 plus that 57. I ain't got a calculator. I can't count either. I'm gonna just say I think it's like 130. 138. Let's just say 138. You know, taxes, all that stuff. So yeah. So now on this next one, you do it again. You're gonna go back to you're gonna go back to your idea. You risking 20 pips and you're trying to aim for 20 pips. 142. Appreciate it. I was close. I was very close. 142. All right, so now you're going back. You got the same idea. You're risking 20 pips. You're trying to get 20 pips. So you're risking 24.14. I use whole numbers. So we're gonna say you're risking $24. You're trying to get $24. And once again, TP got smashed. Now you got two things. Like you can close out at those 20 pips, or you can take that extra risk and like watch it go down even further. Now let's say it does go down some more and it goes down like 2 times as much. Instead of it going for 20 pips, it went for 40 pips. And you decided to close out. 2 times 2 is 40 because you risk 20 pips. You let it go for 2 times as much, 40 pips. So 17 times 2, I know that's 34. 34. So your payout should be about 48.28 cents. I would say like $48. So correct me if I'm wrong. This is 190. If it's not 190, I think it's 200. Boom. And I'm gonna keep going because this is ideally like I had to really train myself to put myself like in the mind of this. Like I'm still doing trading. Like the charts, that's cool. I can go over a couple of charts after this, but like for the most part, like once I put my mind in the account plan, like that's really how it's going. On top of like I still work too. So like when I get paid, like in the trading account, like instantly, like I don't care, like it has to go straight to the trading account, build it up even more. Or like, you know, if you get IBO checks, if you get paid from the company, like them to the trading account instantly. So like that's like instant jumps on top of the trades already jumping. So anyway, let me do it again. 20 pips for 20 pips. Matter of fact, I sent out a trade last night, AUD CAD. So that one, it was 13 pips, and the take profit was like 40 something pips, but it went for 25. So it went for like 2 times as much. Yeah, it went for 2 times as much. So you risk, it wasn't 20 pips, it was like 15 pips, but it's still the same idea. Like you're gonna max out your risk on those 15 pips, which should be like 32. And then TP1 was smashed for 2 times as much, at least 2 times as much. And that was just a quick trade like I cooked up like early this morning. So You risk $30, your payout was $64. 190 plus 64, 254. All right, boom. 254. It's not showing no more. Hold on, let me restart the link. I don't know why it ended when I got the actual package. I'm gonna start the link over again.